today's lesson. This is a very important standard, and standard in the sense under that we are going to discuss these three standards. One is LKS 32. This discuss the financial instrument presentation, and secondly we are going to discuss the financial instrument recognition measurement part under SLFRS 9, and under third one SLFRS 7 we are going to discuss financial instrument disclosure part. So these are the three standards that we are going to discuss here in the presentation. I am stressly telling that your focus for this subject or for this standard is essential, because this is a lengthy standard. I want your feedback quickly to move forward, because when we discuss the latter part, it's going to be little bit complicated, right? So under the contents, we are going to discuss the definitions, recognition, and financial instrument classification, and financial instrument measurement part, and impairment of financial instruments, derecognition, and derivatives. Also, we are going to discuss about the disclosure parts, right? First, we'll focus on what do you mean, what are the definition given in the standard relating to these financial instruments. Okay, if you look at the financial instrument, this is the definition given in the LKS 32 standard, right? You can get the definition from LKS 32 and see how a financial instrument, look at the common word financial instrument, is defined in the standard. Financial instrument is any contract that gives rise to financial asset of one entity and financial liability or equity instrument to another entity. So here you can identify some of the critical parts or the critical words the standard has used. First one is there's a contract, right? Contract. This is very important one. A financial instrument is any contract. Now we'll say for an example, motor vehicle. You know, motor vehicle, we should account under LKS 16 property plant and equipment standard. Why property plant and equipment standard or a motor vehicle is an asset? Why that won't become financial instrument, right? We'll say financial asset. Why it won't become financial asset? We recognize motor vehicle as an asset. Why it is not become a financial asset? The reason is we recognize motor vehicle in our books of accounts because it has ability to bring future economic benefit, right? There is no contract between the motor vehicle and between the entity. There is no contract between those two parties. But why we recognize that as an asset in the books of account? Because it has the ability to bring future economic benefits. That is why we recognize. But why we recognize particular asset as a financial asset or a financial instrument? Because we have a contract. Now, when it comes to motor vehicle, we don't have a contract with the motor vehicle. No. It can bring me the future economic benefit. That's why I recognize that as an asset in my books of accounts. But when it comes to this financial instrument, the key thing you should keep in mind that there should be a contract. Here, remember the contract in the sense it won't be a written contract that you and myself want to sit and sign for, right? It may be whatever indication of a contract, right? So here the main element that you should keep in mind, there should be a contract between, either it may be written or either it may be orally, doesn't matter. There should be a contract between two parties, right? So that is a key element in a financial instrument. Then if somebody asks from you why PP is not a financial asset, why it's become just an asset, fixed asset, why you can't recognize it as a financial asset, your clear answer should be, in case of a PP item, we don't have a contract with the PP item because it brings us the future economic benefit. We recognize that as an asset. But in order to recognize particular asset as a financial instrument or a financial asset, there should be a contract in it, right? Contract in it. So we'll read the definition. A financial instrument is any contract, remember, that give rise to a financial asset of one entity. It creates financial asset to one entity and financial liability or equity instrument to another entity, right? Remember, this is the nature of the financial instrument. It creates financial asset to one entity on the other side, it will be a financial liability
Sir,
or
present
equity instrument.
sir.
Can you see it now?
Now, okay, sir.
Okay, right. So remember, financial instrument is any contract. There should be a contract that gives rights to a financial asset of one entity and financial liability or equity instrument to another. We'll say, for an example, I go to bank, right? And I am applying for a loan from the bank. Now I am taking the bank loan. When I am taking the bank loan, bank's point of view, it is a financial asset. Why? The reason is bank and myself has entered into a contract. I have taken a loan where bank gives me a loan. When bank gives me a loan, bank's point of view, it is a financial asset for them. Why? I should pay to the bank. That means bank has right to receive, right? So bank's point of view, it is a financial asset. My point of view, it is a financial liability. The reason is I have a contractual obligation to pay that cash to the bank, where bank has contractual right to receive the cash from me. So their side, it's a financial asset. My side, it's a financial liability. So this is the nature of a financial instrument. There should be a contract. One party, it should be a financial asset. Other party, it can be a financial liability or equity instrument. Okay, we'll take an example like this. I am purchasing shares of John Keels, right? I am purchasing shares of the John Keels. Now, my point of view, it is an asset for me. It is a financial asset for me. And John Keel's point of view, it is the equity, right? It is the equity instrument. That's what it says. This will be rise to give a financial asset to one party. The other party, it will be a financial liability or an equity instrument. Understood? So this is the nature of the financial instrument. Remember, we discussed here the definition of financial instrument. In this definition, you can identify there are three sub words or sub terms that we can identify from this definition. One is financial asset, the other one is financial liability, and third one is equity instrument. Now we'll see how standard define a financial asset, right? How we define a financial asset. Financial asset is any asset that is cash, right? Cash is a financial asset. That's how they recognize. Cash is a financial asset. Oh, an equity instrument of another entity. Clear? Equity instrument of another entity. Now say for an example, if I purchase shares of 8 Spence Group, so that is a financial asset for me. Why? I have purchased equity instruments of the other organization. They are equity. I am taking their shares. So it will be a financial asset for me, right? The second one is equity instrument of another entity, or contractual right to receive cash, or another financial asset from another entity, or to exchange financial asset or financial liabilities with other entity under conditions that are potentially favorable to the entity. Okay, the third definition is little bit complicated. For the time being, we'll try to learn half and we'll learn the balance part little later, right? Look at this. It says a contractual right to receive cash or another financial asset from another entity. Now, say for an example, the very first example which I took. Now, when I'm going to bank and take a bank loan, right? From the bank's point of view, they have contractual right to receive cash, isn't it? They have this contractual right to receive cash, right? They have contractual right to receive cash, right? Or else we'll take a simple example. I am purchasing some of the goods from a company on credit basis. Credit basis in the sense, company's point of view, it is a debtor, trade receivable balance. So I have a contractual right to pay, obligation to pay, where the other entity's point of view, they have contractual right to receive cash for whatever the things that they sold. Understood? So there should be a contractual right to receive cash or another financial asset. Maybe now, say for an example, I have taken some goods from the particular entity on credit terms. Instead of that, I am giving my fixed deposit. Now, I am taking some of the goods from the particular seller, right? I need to pay cash. No, without paying cash, I am giving my financial instrument, my fixed deposit to him, right? So the seller has the right to receive cash, or seller has right to receive other financial asset, so which is a financial asset. So they have contractual right to receive cash, right? Or else the standard define financial asset as contract that will or may be settled in the entity's own equity instruments, right? We are going to now a contract, there is a contract, right? Will or may be settled in the entity's own equity instrument and is a non-derivative for which the entity is or may be obliged to receive variable number of entities' own equity instruments, or derivative that may be settled other than by exchange of the fixed amount of cash or another financial asset with fixed number of entities own equity instruments. This is little bit complicated you to identify for the time being. So just without this final point, we'll proceed. Then later on, we'll come back here and see what this last paragraph says, right? Otherwise, it will getting little complicated. Now, in nutshell, what do you want to keep in mind? We discuss what is a financial instrument now. Financial instrument means it gives rise to financial asset to one party and financial liability or equity instruments to the other party. There are three types of financial instrument we identify. First one is financial asset. Second one is financial liabilities. Third one is equity instrument. Now we discussed about the financial asset. So we know what is the definition for a financial asset. Cash is under financial asset, or we call equity instrument of another entity is a financial asset, or else if we have contractual right to receive cash, that is also considered as what? Cash or another financial instrument, that is also considered as a financial asset. That part is clear, right? Now, say for an example, we'll take few examples. I am depositing my money in a fixed deposit. It's a financial asset. Why? There is a contractual right to receive me financial asset in future. Why? I have put my fixed deposit. At the maturity, with the interest, I should get my fixed deposit back to me. So I have a contractual right to receive cash. That is one example. I am selling some items on credit terms to a customer. Then, my point of view, I have sold. So I have contractual right to receive that cash, right? So those are the examples. I have invested in a debenture. At maturity, I should get my debenture with the interest. So that is a contractual right to receive cash. Those kind of things or the instruments we classified as financial asset. If we move to the financial liability definition, that is the opposite of this financial asset. What it says? Financial liability is any liability that is a contractual obligation. Remember, always they are using this word, contractual obligation, contractual right. That word, contractual word is using all the time, right? So, I have a contractual obligation to deliver cash. Very simple example. I am taking a bank loan, so I need to pay monthly my rental to the bank. That is, I have a contractual obligation to settle, right? So, what it says, financial liability is any liability that is a contractual obligation to deliver cash or for other financial assets to another entity. That means now, if I am taking the bank loan, I need to pay the bank rental or the monthly rental to the bank. That means I have a contractual obligation to deliver cash, or else if I don't have money with me, my financial asset I am giving. I will say I have a fixed deposit which I have invested. I can give that fixed deposit to the bank. I am giving financial asset to the bank. So that is called the contractual obligation. Exchange financial assets or a financial liability. These two definitions we will discuss little bit in later. Right. So this is a financial liability. Simple definition. financial asset and the financial liability. You know what is financial asset. Now financial liability. Assume that you issue a loan. Remember these words, right? Issue a loan. That means you have not taken a loan. Sorry, you have not invested. You have issued a loan in the sense you have taken the loan. You have issued the loan. Issued. ඔයයි loan එක issue කරලා තියෙන. Loan එක issue කරනවා කියන අපි හිතමුකෝ මට ණයක් ගන්න ඕනේ වෙලා I am issuing debentures. What do you mean by I am issuing debentures? I have requested other parties to invest with me. So it's liability from my point of view, which is a financial liability. So those are the example for financial liability. Now we know what is financial asset. We know what is financial liability. Now we will discuss the last one, the equity instrument. Okay. Now tell me, this is the balance sheet. In this balance sheet, you have this side assets. This side you have liabilities. When you take this total together, right? When you take this total together, what is this balance part we call? What we call to this balance part?
Net assets.
Yes, net asset, or we can call it the equity of the organization. How you got this equity? You took the total assets, from that you deduct minus, right? You deduct liabilities. What you did, you deduct your liabilities from your total asset. The balance part you call the equity. The same approach is given in the standard to define the equity. How it says, any contract that evidence residual interest in the assets of an entity after deducting all of its liabilities. How they define the this equity instrument? Any contract that evidence a residual interest, right? That residual interest in assets of an entity after deducting all of its liabilities. When it deduct all these liabilities from the total asset, if there's any balance residual part, residual interest in the sense balance part, remaining part, itiri kotasa, right? Residual part, we call it as the equity instrument. So this is how they define these the definition or the three terminologies which is in the financial instrument definition. We know financial instrument is there. Financial instrument means financial instrument give rise to one asset, financial assets to one party, and financial liability and equity instrument to the other party. There we identify financial instrument has three parts, three categories: financial assets, financial liabilities, and equity instrument. We identify what is financial asset, we identify what is a financial liability, and we identify finally what do you mean by or what is equity instrument. So those are the three main types of the financial instrument. So with the first part we have done. Now we need to go for the recognition, right? Tell me, in case of a property, plant and equipment, what are the recognition criteria? What are the recognition criteria of a property, plant and equipment? Yes, someone can tell that recognition criteria of a property, plant and equipment. Yes, one thing is it has the ability to bring future economic benefit. Second one, cost can be measured reliably. Yes, those are the two recognition criteria we are used to recognize particular asset as a fixed asset in our books of accounts, isn't it? Yes. Likewise, when we recognizing this financial instrument, remember the word, right? Financial instrument, here we discussed about financial asset, how we should recognize this financial asset or a financial instrument technically in the financial statements. SLFRS 9 says entity should recognize financial asset when and only when the entity become party to the contractual provision of the instrument. Now, say for an example, one entity sells goods to the another entity. One entity sells goods to the another entity and promise to pay at a later date both entities right? Here what happens is they pay at a later date. They agree to pay this at the later date. Now, both entities become party of this particular sales contract, right? One party recognize this as a receivable. It is a receivable. It's a financial contract. The other party, it recognizes as a payable. So this is what? A financial instrument. Financial instrument, it creates. So asset, when we should recognize, that is the issue. When we become a party of this contract. Say we go to bank and we take a bank loan. When we should recognize that in a financial statement? When we enter into the agreement. I am entering into the agreement with the bank, signing the contract. So that is the date where both of the party, bank and myself, entered into this contract. So that is the date where you should start the recognition part, because both of us have become parties to this contract. So that is the date where you should recognize this in the financial statement. That is a simple scenario that you should keep in mind. Okay. The next important thing is financial instrument classification and financial instrument measurement. I thought to discuss this together. Right. Okay, look at this. We are focusing here the main or the basic classification for this financial instrument. Right. Just keep this diagram in mind, and you should have draw this diagram in a separate sheet, not now. Right, remember, because we should have this overall summary sheet documented and pasted in your wall, because then it is you can use as a short note, right? Not now, do it little later, but for the time being, just look at this classification. Okay, now we discussed about this financial instrument. Financial instrument classified into how many parts? Can you all tell the answer rather than type the answers?
3.
Yes, 3. What are those?
Financial assets.
Financial
liabilities.
assets. Yes, and equity instrument. Right. So financial instruments are divided into 3 parts called financial assets, financial liabilities, and equity instruments. Okay. First, we'll move to the financial asset. Okay. Tell me example for financial assets.
Cash.
Shares, okay. Cash, okay. Right, cash, okay. Other than that, examples, day-to-day life examples. Yes. Can you speak up? That's easy for me to run the class. Yes. What are the examples for the financial assets? Yes, Riyaz, shares. If you invest in shares, yes, it's a financial asset. What else?
Fixed deposits.
Yes, if you put your money in a fixed deposit, that is a financial asset. What else? If you invest your money in debentures, it's a financial asset, right? When we look at this instrument, we discussed 3 instruments: shares, fixed deposit, and debentures, investments, right? These are investments. Shares, fixed deposit, and instrument. Can you see similarity or dissimilarities in these 3? You can divide that into mainly 2 categories. As what? What sort of investments, assets? The 3 examples we took was shares, fixed deposit, and debentures. 3 examples we took. How you can put them into 2 buckets if you want? Yes. Do 3 of them are similar?
Interest and dividend?
Yes, interest and dividends. Siddharth, what you have done is equity and liability. It's not a liability. These all are investments. We have some extra money. We have taken some shares. That is my investment. We have extra money. I have put them into the fixed deposit. That is also investment. So how you can classify them? Yes. Kasun, you also have try good try. Yes, Malshani, fixed return, fixed okay. The basically what I wanted to go with this Michel's answer, that is equity and debt. If you look at this investment, I have invested in shares. That means I have invested in equity. Equity investment. I have done equity. I have done investment in equity. Or else, in the second scenario, fixed deposit and the debenture. Those are what? Debt instrument. Debt instrument. Those are not equity. Eva shares name equity instruments name debt instruments. So likewise, this financial asset I can divide into main two categories again called equity and debt. Clear? Okay. Now recall your mind. Recall your mind. Carefully close your eyes and listen to my words. Financial instrument. We divided into three parts. What are those? Financial assets, financial liabilities, and equity instruments. Then again, these financial assets I subdivided into two parts. That is equity and debt. I'm going to further one layer. I'm going to divide this further one layer. Then I'm done, right? When it comes to this equity, I can divide this equity again into two parts. One I call fair value through profit or loss. We call it FVTPL. What is it? Fair value through profit or loss, right? Second one is fair value through OCI. What are those two? Fair value through profit or loss, and next one is fair value through OCI, right? When it comes to debt, this debt can be classified into three parts. Easy to remember. First one, fair value through profit or loss. Second one, fair value through OCI. Third one, we call amortized cost financial assets, right? We done the particular one category. Now you can focus it again. Now again, close your eyes and repeat it from your mind. First one, financial instruments. Financial instruments divide into three categories: financial assets, financial liabilities, and equity instruments. When it comes to financial assets, that again divided into two parts. One is equity, the other one is debt. When it comes to equity, equity is two types, that is fair value through profit or loss. Second one, fair value through OCI. Again, I come to the debts. First category, fair value through P&L. Second category, fair value through OCI. Third category we call amortized cost. Okay, if we look at this financial asset category, I'm talking about the third layer, the final layer. How many main types are there? If you look at this, how many main types are there? If you look at this last layer, these three layer, how many main categories you can identify? Commonly, it has been divided into how many categories? Yes, three categories. What are those? Fair value through P&L, fair value through OCI, and amortized cost. Okay, then financial asset can be divided into three main categories: fair value through P&L, fair value through OCI, and amortized cost. Clear? Onna api එක category එකක් ඉවරයි. Finish, done. Right? Again, draw this in your mind. There are the financial instruments there. Financial instrument can divide into three parts called financial assets, financial liabilities, and equity instruments. When it comes to financial assets, we divide that into two parts: equity and debt. Equity divide into two parts: fair value through P&L, fair value through OCI, and debt divide into three parts: fair value through P&L, fair value through OCI, and the amortized cost. Clear? Right. It is not a difficult part for the financial liabilities, only two parts. It's easy. One is fair value through P&L, other one is amortized cost. There is no fair value through OCI. Clear? Liabilities is straightforward. Fair value through P&L and fair value through P&L and amortized cost. Those are the two categories. Luckily, equity instrument, they don't have any classification. Clear? So this is the broader picture you should keep in your mind, right? What you should keep it in your mind. Financial instrument basically divided into three parts. What is that? Financial assets, financial liabilities, and equity instrument. Financial assets are subdivided into two parts, equity and debt. Then equity investments are two types, fair value through P&L and fair value through OCI. Debt instrument are three types, fair value through P&L, fair value through OCI, and amortized cost. Financial liabilities, when it comes to the financial liabilities, fair value through P&L and amortized cost. So that is the classification. Okay, simply I am asking some questions. Now I am giving you some financial instruments. You want to classify them into these each buckets, right? What are the buckets we have? We have a bucket called equity fair value through P&L. We have another bucket called equity fair value through OCI. We have another bucket called fair value through P&L, debt fair value through P&L. We have another bucket called debt fair value through OCI, and we have another bucket called amortized cost debts, and we have another bucket called fair value through P&L liabilities, and we have another bucket called amortized cost financial liabilities, and we have another bucket called equity instruments. Okay. Now tell me, I am giving you some examples. Tell me to which bucket we need to put this. Okay. I am purchasing shares of John Keels. I am purchasing shares of John Keels. I am taking shares of the John Keels. I want to keep this share for 4-5 days, and when the price goes up, I am going to sell to get a capital gain. To where I need to classify them. I am purchasing
financial asset.
Yes. Equity under which bucket?
Equity, fair value through P&L.
Fair value through P&L. Right. Good. That answer is correct. We'll see why we should classify them under that account later, but I'm just asking your common sense, general knowledge. Okay. Then I have put my money in a fixed deposit. I have put my money in a fixed deposit. Where should I classify?
Value through profit and loss.
Sorry, I didn't get that.
Value through profit and loss.
Is it under which category? The financial asset or a liability?
Financial asset.
It's a financial asset. Is it debt or equity?
Equity.
It is equity, okay, and under fair value through P&L.
Yes.
Okay, that answer is wrong. Why?
It's a debt instrument.
It's a debt instrument. That's correct. Why? I have put my money in a fixed deposit. Am I purchasing shares of another company? No. I have put my money in a fixed deposit. That means it's a debt instrument. It's not equity instrument. It's a debt instrument. Right? That's this classification correct. Then I should go to the more granular level. That is it a fair value through profit or loss, fair value through OCI, or the amortized cost? That is the question. Where you feel to put that? Is it under fair value through P&L, fair value through OCI, or the amortized cost? That question is with you. Okay, we'll see where to put that, right? Third scenario. I am purchasing shares of another company, we'll say a private limited company. My intention is not to keep, not to earn the short-term profits or not like the John Keel shares. Why I put John Keel shares? Because I know that in after 2-3 days, the prices will fluctuate, prices will go up. Then by that time, I'm going to sell my shares and get that trading profit. That is my intention. Earlier I had. Now I am taking my shares, not a PLC, but we'll say a private limited company, right? My intention is not to earn short-term profit, to keep it for a long term, to get dividends or get මේම තියෙනවා. දැන් මං 125ක විතර shares අරගෙන තියෙනවා. මට ඉස්සෙල්ලාට control එක ගන්න ඕනේ මේ company. තව 25ක් කොහමද චුට්ට එකතු කර ගන්න ඕනේ. That is my intention. Technically, where you should classify that? Is it a financial asset, financial liability, or equity instrument? It's a financial asset. That's clear. Is it equity or a debt? It's equity. Is it fair value through OCI or fair value through P&L? Fair value through OCI. That's correct. Then ඔයාලා ඔය දෙන්නේ ඔයාලගේ ඇඟේ තියෙන sense එකෙන් උත්තරේ දෙන්නේ. But you don't know what is the theory behind this. ඔයාලට හිතනවා right මේකට තමයි මේ කියන්න වැත්තේ කියලා. Right. ඔයගොල්ලෝ දන්නවද දැන් Sri Lanka we have a share market now. Share market අපි දන්නවනේ Colombo Stock Exchange. That is where the share market operates. If you have money, you can invest in shares and you can sell that shares whenever you want. Likewise, government is issuing treasury bills. Government is issuing treasury bonds. Why government is issuing treasury bonds? They wanted to take long-term loan from the general public, so they issue treasury bonds. In Sri Lankan market, we have a treasury bond secondary market. Colombo Stock Exchange is what? It's a primary market or a secondary market? Colombo Stock Exchange, is it a primary market or a secondary market? No, it is not a primary market. What do you mean by primary market? Primary market in the sense, now, ඔන්න අපි මේම හිතන්නකෝ. We have a company called XYZ, right? That XYZ company issuing shares. කාටද issue කරන්නේ? Shareholders ලට. එතකොට මම සල්ලි දීලා XYZ එකේ මොනවද කරන්නේ? shares ටික purchase කරනවා. ඒ shares ටික දැන් මගේ ගාව තමයි තියෙන්නේ. මම කවුද investor කෙනෙක්? XYZ company එකේ equity තමයි මම අරගෙන තියෙන්නේ. That is the primary market. දැන් මගේ ගාව shares ටික තියෙනවා. XYZ Limited now become quoted public company. PLC එකක් වුණා. ඒ කියන්නේ එයාගේ නම Colombo Stock Exchange එකේ ලියාපදිංචි කරනවා. He registered his name as a registered company. PLC එකක් විදියට. Right? Public company limited එකක් කරනවා. නැත්නම් අපි quoted public company එකක් කරනවා. Quoted public, right? That means I am listing my shares in the share. Now I have shares. I can sell my shares. Which market? In the secondary market, right? We use Colombo Stock Exchange as the secondary market. It is not the primary market. Primary market in the sense where the shares is issued for the first time. Secondary, the Colombo Stock Exchange, they are not any primary markets. They are secondary market. Then it was මං අද මගේ තිබ්බ shares ටික තව person කෙනෙකුට විකුණනවා. එයා තව person කෙනෙකුට විකුණනවා. එයා තව ඔය transaction එකේ වෙන්නේ මොන market එකේද? It happens in the secondary market. You know the difference between the primary and the secondary market. We call this Colombo Stock Exchange as the secondary market. It is the secondary market. Colombo Stock Exchange is secondary market for what assets? Equities. ඉක්විටි වලට තමයි secondary market එක වෙන්නේ. Colombo Stock Exchange එක. Understood? Okay. So you know what do you mean by treasury bond? Treasury bond එකක් කියන්නේ මොකද්ද? government එකට සල්ලි නෑ. government එකට සල්ලි නැති වෙනකොට government එකේ accountant කවුද? government එකේ accountant තමයි central bank එක. central bank එක මොකද කරන්නේ? okay ඔයාට සල්ලි නෑනේ. ඉන්න මම loan එකක් කරන් දෙන්නම් මිනිස්සුන්ගෙන් කියලා. Central bank issues what? Treasury bonds. Central bank issue treasury bonds. To whom? To the general public. එකන දැන් මිනිස්සෙක් විදියට මට ගිහිල්ලා treasury bond එකක් purchase කරන්න බෑ central bank එකකින්. central bank එකකින් මට බෑ treasury bond එකක් ගන්න. I have money but I can't purchase from the central bank itself. Central bank sells that treasury bonds to whom? To primary dealers. කියලා set එකක් ඉන්නවා. කවුද ඒගොල්ලෝ කියනවා primary dealers. ප්‍රාථමික වෙළෙන්දෝ කියලා. In Sri Lankan context, all the banks are primary dealers. ඒ කියන්නේ මගේ ගාව 10 million සල්ලි තිබුණොත් මට ඒ සල්ලි ටික treasury bond එකක් purchase කරන්න use කරන්න බෑ. Reason එක I can't purchase that particular treasury bond from the from the central bank. I should purchase it from the primary dealer. ඒ කියන්නේ මම ගිහින් ගන්න ඕනේ එක කාගෙන්ද? බැංකුවකින් මට ගන්න පුළුවන්. බැංකුවට මම කියනවා central bank එක treasury bond issue කරේ මට ඒ treasury bond එකක් දෙන්නකෝ කියලා. I can invest in that money through that primary dealer. You know that recently මේ ලංකාවේ කතා වෙනවා bond scam කියලා ලොකු issue එකක්. bond scam. බෙදුම් කර වංචාව කියලා bond scam එකක්. That bond scam is also done by one primary dealing company called the Perpetual Treasuries. අහලා තියෙනවනේ Perpetual Treasuries කියන company එක ඇවිල්ලා කවුද? Primary dealer කෙනෙක්. When central bank issue the treasury bonds, primary dealer on behalf of the people, they purchase first this treasury bond and then they sell that in the secondary market. So primary market is the market where the primary dealers purchase that from the central bank. ඒගොල්ලෝ ගාව තියාගෙන ඉන්නේ නැත්නම් ඒගොල්ලෝ මොකද කරන්නේ? They sell that treasury bonds into the market like what? Shares. Then shares primarily issue කරන්නේ company එක. Secondary market එක තමයි Colombo Stock Exchange එක. So when it come to the central bank issue treasury bonds. As primary dealers, banks and all other registered primary dealers purchase the treasury bonds from the central bank and they sell that in the secondary market where we can purchase it. Understood? Okay. Clear? Then ඒ කතාව හිතින් පැත්තකින් අමතක කරන්නකෝ. දැන් අපි ඉන්නේ කොහෙද? We are in our presentation. අපේ presentation එකේ මම ඔයාලට ඉස්සෙල්ලා කිව්වා මෙහෙම, right? Now you purchase shares of John Keels. You purchase shares of John Keels, right? From where you purchase that shares? From the secondary market, Colombo Stock Exchange. Why you purchase those shares? You want to sell that shares in the short term market. හෙට අනිද්දාට මේක විකුණන්න ඕනේ price එක වැඩි වෙන හින්දා. Therefore you classify those investment under this fair value through profit or loss bucket because it's a financial asset. It's the equity which is fair value through profit or loss. හරිද? Then mage second question. I have some money. I am investing in treasury bond. I am investing in treasury bonds. Shares වගේම තමයි. Treasury bond එකේ මම invest කරන්නේ ඇයි? Treasury bond එකේ invest කරන්නේ. ඔයගොල්ලෝ දන්නවද? Share prices උඩ පල්ලෙහා යනවා වගේ treasury bond වල price උත් උඩ පල්ලෙහා යනවා. එතකොට මට බලලා හොඳ ගාණක් ආවොත් treasury bond එක විකුණන්න පුළුවන්. දැන් මගේ ගාව සල්ලි තිබිලා first example එකේ මම ගත්තේ shares. Second example එකේ මම ගන්නේ මොනවද? Treasury bond. Treasury bond එක මම සල්ලි ටික invest කරනවා in the secondary market. I am keeping that treasury bond for a few period of මාස සතියක් දෙකක් තියාගෙන ඉන්න හොඳ price එකක් આવුත් විකුණන්න කියලා. Where I should classify that? Where I should classify that? Where should I classify that part?
Debt fair value through profit or loss.
Very good, right? It should be a debt fair value through profit or loss. Why? treasury bond. I have invested my money in a treasury bond. Government එක ණයක් දීලා මම ඒ ණයට සල්ලි දීලා. එතකොට මට asset එකක් නේ. So it's a financial asset. It's a debt instrument. ඒක shares නෙමෙයි මම ගන්නෙ. I am investing in a debt instrument. මගේ purpose එක මොනවා කරන්නද? price එක වැඩි වුණොත් විකුණන්න. fair value through profit or loss. Right? Likewise, I want to identify different financial assets, and I want to identify to which bucket I should classify. මේකටද දාන්නේ. දෙවෙනි bucket එකද දාන්නේ. තුන්වෙනි bucket එකටද දාන්නේ. හතරවෙනි එකටද දාන්නේ. මේකටද දාන්නේ. Right? Likewise, I know to classify. ඒ හින්දා මම දැනගන්න ඕනේ දැන් මේව තියෙනවනේ. Then you have seen now when it come to this garbage bins. When it comes to this garbage bins has specified what do you want to put into this garbage box or the garbage bin. Sometimes it says disposal items, or we'll say papers, polythenes, glasses. Likewise, we have defined that particular bucket, right? Accordingly, අපි මොකද කරන්නේ? අපි ගිහිල්ලා glasses පත්‍ර වලට කඩදාසි වලට දානවා. Glasses ටික ගිහිල්ලා polythene වලට දානවා. එහෙම දැම්මොත් we have put that into the wrong bucket. Now, according to this classification, we want to see and identify which garbage need to be put into the which dustbin. අන්න ඒ වගේ මේ හැම garbage dustbin එකකටම හැම මේ bin එකකටම තියෙනවා එයාගේම definition එකක්. So we want to identify that definition, and accordingly we can put them into this correct bin. Now we'll learn what is that definition. Then we'll come back here and see whether whatever investment when I'm asking to you, you can put that into the correct bucket. Okay, that knowledge you should get that. Okay, now first of all we'll look at the first category, which is the equity, that is under financial asset. First category is equity. Okay, we'll see how the basis, what is the basis behind to classify this as equity, right? Now we know that equity instruments we should classify either into the equity instrument we should classify neither into the fair value through OCI or the fair value through P&L. Those are the two classifications, right? These are the two classifications: fair value through P&L and fair value through OCI, right? When it comes to this equity instrument, why we classify these two into the fair value through P&L and the fair value through OCI, right? The fair value through profit or loss. Why we should classify into this category? Normally, we have expectation when we come to the equity, and when we are keeping this equity for the trading purpose. හෙටානිද්ද විකුණන්න තියාගෙන ඉන්නවා නම් they have designated to the fair value through P&L. දැන් සාමාන්‍ය මෙහෙමයි පුතා. ඒ කියන්නේ දැන් මේකයි මෙතනදී කියන තේරුම. හරිද? දැන් අපේ ක්ලාසස් වල ළමයි ඉන්නවනේ. නේද? ක්ලාසස් වල ළමයි ඉන්නවා. ඔය ක්ලාස් ඉන්න ළමෙක් අපි හිතමුකෝ ඔන්න දැන් ලෙක්චරර් මොකක් හරි ලෙක්චර් එකක් කරන අතරතුර සද්දයක් දානවා මොකක් හරි. පන්ති එක්කෙනෙක්. විසිල් එකක් ගහනවා. right. කවුරු හරි විසිල් එකක් ගැහුවොත් හරි අපි ක්ලාස් එකේ විසිල් එකක් ගහනවා. කවුද ඒක කරේ කියලා හැරලා බලපු ගමන් ඔක්කොම හැරෙනවා රුෂ්ටි දිහා. රුෂ්ටි තමයි යෝග කරේ. why? Rushdie has designated that. ඒ කියන්නේ ඔය වගේ වැඩක් කරොත් රුෂ්ඩිම තමයි කියලා ඔක්කොමලා දන්නවා. This is just an example, Rushdie. Right? අපි දන්නවා විසිල් එකක් ගැවුවොත් රුෂ්ඩියම තමයි යෝග කරේ කියලා අපි දන්නවා. Why? You have designated for that. ඔය වගේ වැඩක් කරොත් රුෂ්ඩිම තමයි. Likewise, when it comes to this fair value through profit or loss, equity ගත්තොත් ඒක ඉතින් රුෂ්ඩිම තමයි වගේ අපි දන්නවා. ඒක ඉතින් fair value through equity share එකක් ගත්තොත් that is fair value through P&L. By default අපි හිතනවා right. මේ වැරද්ද කරේ මෙයා කියලා. ඒ කියන්නේ මොකක් කරේ එකට හැමදාම මාට් වෙන එක නා ඕන දෙයක් කරත් අපි නිකන් බලන්න අන්න ඒ වගේ මොනවා හරි ඉෂුව එකක් වුණොත් මොනවා හරි ඉන්වෙස්ට්මන්ට් එකක් ගත්තොත් equity by default එයා යන්නේ මොකේටද? fair value through P&L. That's what it says. The normal expectation is that equity instrument will have the designation of fair value through profit or loss. එයාට අන්දලා ඒමමයි තියෙන්නේ. මේ මොඩල් එකේ ඒමම තමයි. Designation to the fair value through P&L. Right? Normally you can call that if we purchase this share for the trading purpose. Trading කියන්නේ හෙට අනිද්දා විකුණන්න නම් technically those kind of instrument we can classify under the fair value through P&L. Here also I have taken the same example. Investing in John Keel shares to sell in the short term when the share price rise up. That means if that is the case, we need to classify them under the fair value through P&L bucket, right? Second category is fair value through OCI. Then mum fair value through OCI එකට දාන්නේ මොන වගේ වද? Remember, it is possible to designate an equity instrument as fair value through profit or loss. Fair value through OCI, provided that following condition are complied with. First one, equity instrument must not for held for trading. විකුණන්න තියාගෙන ඉන්න දේවල් නෙමෙයි, not for held for trading. If it is held for trading, you can put them into the fair value through P&L bucket, right? There must have been an irrecoverable choice for this designation upon its resignation as the same. මෙයාව දාගන්න තැනක් නැහැ. කොහෙටද මෙයාව අල්ලලා දාන්නේ කියලා ඔක්කොම කුණු ටික තියෙන්නේ. අන්න ඒ ටික දාන්න කියන්නේ මොකේටද? fair value through OCI bucket එකට. Yeah, held for trading වෙන්න බෑ. If it is held for trading, it has to be fair value through P&L. Otherwise, there must have been no irrecoverable choice. There must have been an irrecoverable choice. මෝදාන්න දෙයක් නෑ. ඔන්න ඔයාලලා මේ බකට් එකට මේ කුණු ටික අරගෙන බලන්න. වීදුරුයි පොලිතුනුයි කඩදාසි මගේ ගාව තියෙන මොනවා හරි අපි හිතමුකෝ. something else යකඩ ටිකක් තියෙනවා කොහෙටද ගිහින් දාන්නේ කියලා මම වීදුරුවේ කස්සටම ඔබනවා. Likewise, I have no choice, so I can put them under this fair value through OCI. Technically, we put we put what do you say, these shares we keep where we purchase and keep for the strategic purpose. ඒ කියන්නේ shape එකේ මෙහෙම තියාගෙන ඉන්නවා. මම 10% shares ගන්නවා company එකක. ඔය shares ටික තියාගෙන ඉන්නවා විකුණන්නේ. තව ටික දවසකින් තව 10% ගන්නවා. Now I have 20. තව ටික දවසකින් තව 10% ගන්නවා. Now I have 30% where I have a significant influence now. හිමීට මම මොකද කරන්නේ? මේ company එක control එක ගන්න try කරනවා. Right? Likewise, I can keep that for the strategic purpose. If that is the case, I should classify them under the fair value through OCI. Right? දැන් ඔයාලා දන්නවනේ දැන් මේ ඉක්විටි කැටගරි එක ගත්තොත් මේ තියෙන ඉක්විටි කැටගරි එක තියෙන්නේ, right? මෙන්න මෙයාගේ මේ ඉක්විටි කැටගරි එක තියෙනවානේ. Okay, now I am giving you some examples. Okay, I am purchasing shares of we'll say Sampath Bank to sell in the short term. Where should I classify? I am purchasing shares of Sampath Bank. My purpose is to sell that quickly in the short term market. Where should I classify? Where is my company accountant? Where you classify equity fair value through P&L? That's clear. You are the accountant of a company and now you want to invest good, right? Now you are purchasing now you are purchasing shares. ඔයාගේ boss කියනවා මේ shares ටික ඔහොම තියමුකෝ අපි ටික කාලයක් තව ටික කාලෙකින් මට තව shares ටිකක් ගන්න ඕනේ අර company පොඩි control එක ගන්න. I am keeping that. Where you should classify? equity fair value through OCI. තේරුණා නේද දැන්? තේරුණාද දැන්? අපි බලමු අනිත් buckets වලටත් අන්නවම කොහොමද දාගන්නේ හරියටම. එතකොට අපි ගානට කොළ bucket එකට දාලා spoil food ටික foods bucket එකට දාලා අන්නෙම ඉගෙන ගන්න ඕන. අපි that's what we are trying, right? Then it's clear. Now can you remember when I am doing this classification, I told that we are doing classification and measurement together. දැන් අපි දන්නවනේ equity එක ගැන. ඒ හින්දා අපි equity එකේ measurement එකක් කරගෙන යම් මෙහෙම measurement part එක, right? That is equity instrument, how to measure. You can see how to measure the equity instrument. Now we know there are two equity instruments, no, fair value through P&L and fair value through OCI. Tell me, when it comes to a fixed asset, I'm talking about now property, plant and equipment. We say motor vehicle. Initial measurement standard says to record at which value? Initial measurement. PP එකක් ගත්තොත් cost එකට ගන්න ඕනේ. අන්න ඒ වගේ අපි දැන් බලමු what are the initial measurement given for this equity instruments. Okay. Standard එක lazy. ඔයාලට හොඳට මතක තියාගන්න lazy ඕනම financial instrument එකක් initially measure කරන්නේ fair value එකටමයි. Everything at the fair value. So nothing to be worried about. All the financial asset or financial liability or whatever it is, you recognize initially at the fair value. Now we'll look at the fair value through profit or loss first. So we'll take this example. Through the example, it's easy for you to understand this theory. Look at this. An entity invests in 20,000 equity shares in XPLC. They have purchased 20,000 equity shares in XPLC at fair value of 50 each. Transaction cost incurred was 125,000. Now, I have purchased these shares, right? I have purchased these shares, 20,000 shares I have purchased by paying 50 rupees. For that purpose, I have incurred transaction cost of 125,000. Broker fees, anammanan tiyana transaction cost. එක ගිහින් තියෙන 125,000. කවද්ද මේක ගත්තේ අපි හිතමු at the beginning of the year. As at the reporting date, that is at the end of the year, fair value of these shares has increased to 60. ගත්තේ කීයටද 50 ගානේ. Transaction cost එක ගියා 125,000. අවුරුද්දකින් පස්සේ this price increase or the අවුරුද්දකින් නෙමෙයි, we'll say at the reporting date this price is increased to, ඒ කියන්නේ balance sheet එක හදන දවසේ මේ price එක වැඩි වෙනවා කීයටද 60 rupees වලට. Okay, now keep that in mind. Now we are going to discuss about this fair value through P&L. Initial measurement. How you should do the initial measurement like property, plant and equipment to the fair value. ඒක අපි දන්නවා. ඒකයි අමතක වෙන්නේ නැහැ. ඔක්කොට මෙතනට එන උත්තරේ fair value. Remember, we have incurred transaction cost of rupees 125,000. Standard says, if you invest in a fair value through profit or loss financial instrument, your transaction cost you should charge to the P&L as an expense. You should charge that transaction cost as an expense to the P&L. Standard එක කියනවා. එතකොට දැන් මට ඊට පස්සේ කියන්නකෝ property plant and equipment subsequently measure කරන්නේ කොහොමද? Yes, how we measure property plant and equipment subsequently.
Cost or evaluation?
Cost or evaluation model. Likewise, we should know what is the subsequent measurement of the fair value through profit or loss financial investments, assets. Standard say if it is fair value through P&L, subsequently also you want to take the fair value, and any gain or loss you should recognize where? In the P&L. That's what the answer itself mentioned in the name there. Fair value through profit or loss. Fair value through profit or loss. So initial measurement is fair value. Remember the new thing, transaction cost you need to charge to the P&L. Then subsequent measurement is at the fair value, and the change in the fair value you should recognize in the P&L. Okay, shall we look at this example? Now it's easy for you to understand this example. Okay. So an entity invests in 20,000 equity shares of XPLC at fair value of 50 each. Transaction cost incurred was 125,000. As at reporting date, the fair value of shares has increased to 60. Now you know initial measurement which value, it has to be at the fair value. How much is the initial measurement? You have 20,000 shares multiplied by 50 rupee. The initial fair value will be 1 million. So you pay cash 1 million. Right, you pay cash 1 million and you debit that to the fair value through financial asset, financial investment asset. So transaction cost is how much? Transaction cost is 125,000. What you should do for this transaction cost? You should charge that transaction cost of 125,000 to the P&L. Right? If you look at this in a T account, this is your fair value through P&L financial asset. Right, and initial measurement at the fair value. So you credit your cash book and debit this fair value through P&L 1 million. And this transaction cost you want to charge to the P&L as an expense. Why? That is how the standard says. Then we'll look at how much is the subsequent measurement, subsequently also measured at the fair value. How much is the fair value at the reporting date? That is 60. 60 into 200,000, it's 1.2 million. Then how much is the fair value gain we identified? That is how much? 200,000. Where we should record this 200,000 in the P&L. Right? We should recognize this in the P&L. Clear how we recognize this kind of the accounting treatment. Initial measurement is at the fair value. Transaction cost, where we record the transaction cost. Yes, what we do for the transaction cost? Yes, transaction cost, where we record the transaction cost?
Charging to P&L.
Charging to P&L. That has to charge to the P&L. Subsequently measured at the fair value. That difference is also we should recognize in the P&L. Clear? Right. So that is in case of a fair value through P&L. හරිද? දැන් ඔන්න බලන්න අපි දැන් දෙවෙනි example එකට යන්නේ fair value through OCI. Right? When it comes to fair value through OCI, remember, easy to remember. Initial measurement at the fair value. Here the transaction cost we add to the fair value. ඉස්සෙල්ලා මොකද කරේ? If it is fair value through P&L නම් ඔක්කොම P&L දානවා. But remember here, transaction cost we should recognize in fair value through, initial measurement we have to measure at the fair value. Transaction cost we should add to the asset. Subsequent measurement is also at the fair value, where we should recognize the difference in the OCI. See, you can see here. Here we recognize that difference in the P&L. Here we recognize this difference in the OCI. Here we recognize this difference in the OCI. Understood? Remember the initial measurement is same, right? Fair value. Subsequent measurement is also same, that is fair value. But remember, fair value through P&L we recognize in the P&L, where this thing we recognize in the OCI. Here we charge to the P&L. Here we add to the asset. Okay, right. Shall we do the same example here to reflect this? Equity invest in 20,000 equity shares XPLC at the fair value of 50. Transaction cost is 125,000. As at the reporting date, the fair value of the shares has increased to 60. Here, initial measurement have to be at the fair value, which is 1 million. What you should do for the transaction cost, you should add this transaction cost to the asset value. Right? So, if you take the fair value through OCI, initially we invest by paying cash. Earlier this 125,000 we charged to the P&L. Now this is a fair value through OCI instrument. So, you should add here. Subsequently, you should measure this at the fair value, which is 1.2 million. There you can recognize this 75,000 gain in OCI. Understood? Here earlier we recognized this gain in P&L, but when we are recognizing that gain, this transaction cost has already charged to the P&L. But here we consider this transaction cost as well, and this gain is also recognized in the OCI. That is the difference in the fair value through P&L and the fair value through OCI.
Yes, sir.
Okay. Now it's clear, right? Okay. So remember that we have discussed about these two categories. Now under equity, we know how to classify under fair value through P&L and how to classify this as fair value through OCI. Also, we know how initially measured and how subsequently measured. That part we know, right? Okay, and you have a question here. We'll see the question. Right, look at this question. Ashes holds the following financial asset: investment in ordinary shares that are held for short-term speculation. Second one, investment in ordinary shares that form purchase date are intended to be held for a long term. How should Ash classify the account for the financial assets? Right, that's clear, right? In the first case, their intention is, right, to speculate කියන්නේ prices up down වුණාට පස්සේ විකුණන්න. So they have taken that for the speculative purpose. So there you want to classify them under the fair value through P&L. Neither investment in equity held for short term speculative purpose must be classified and accounted for as fair value through profit or loss. Such assets are initially recognized at fair value. Any transaction costs are expensed to the P&L. The assets are remeasured to fair value at reporting date. With gains and losses are remeasured, recognized in profit or loss. Right? These assets are remeasured to fair value at the reporting date, with gains and the losses are recognized in the profit or loss. Right? Okay. Second one, investment in equity that from the outset are going to be held indefinitely may be irrecoverable designated upon initial recognition at fair value through OCI. අර දාන්න තැනක් නැහැනේ. එයා විකුණන්නත් නෙමෙයි තියාගෙන ඉන්නේ, මෙයාව තියාගෙන ඉන්නේ for a long term indefinite period එකක් තියෙනවා. So irrecoverable choice එක. දාන්න තැනක් නැහැ. එහෙනම් මේ bucket එකට තමයි දාන්න තියෙන්නේ. So you can classify them under the fair value through OCI. What we should do, initially these kind of assets should measured at the fair value plus transaction cost. They remeasured to the fair value at the reporting date, and gains losses are remeasurement on the recognizing the other comprehensive income. If no such selection on the purchase is made on the investment must be classified under accountant for the fair value through. මේක හරියට දුන්නේ නැත්තම් අපි හරියටම classification එකක් දීලා නැත්තම් මෙයාව P&L දානවා කියලා දැම්මොත් මුල classification එකට දාන්න පුළුවන්. So that's how the answer should be. Okay, now we have classified the financial asset, the first category. Now we want to look at the second category, which is the debt part. Right? How to classify debt parts. Right? Now you clear about the equity part. Now we want to move for the debt part. You can හරියට මොනවද දන්නවද? අපි බලමු. If you invest in a fixed deposit, to which bucket I need to put? If you invest in a treasury bond, your intention is to trade that in the market. ඒ කියන්නේ treasury bond වල price එක අතර shares වල වගේ උඩ පල්ලෙහාදී විකුණන්න. එහෙමනම් මොකද කරන්නේ? එහෙම නැත්නම් you can invest in a treasury bond and keep that until it gets mature. Mature කියන්නේ දැන් උදාහරණයක් විදිහට ගත්තොත් central bank එක treasury bond එකක් issue කරනවා අවුරුදු 5කට. loan එකක් අවුරුදු 5කට. මම ඒක ගන්නවා. I am keeping that till end of the 5 years. මම ඒක තියාගෙන ඉන්න අවුරුදු 5 කල් පිරෙනකම්. like fixed deposit. If that is the case, we have to classify. එහෙම නැත්නම් මම treasury bond එකක් ගන්නවා තියාගෙන ඉන්නවා හොඳ ගානකට આવොත් විකුණන්නම් කියලා. 3 scenarios are. The first scenario, I purchase a treasury bonds. In the short term market, if the price of the bond is going up and down, I am selling that. Second scenario, I am taking this particular bond and keep until it get mature. Third category, I am purchasing the bond and keep it. If I get a good price, I am selling, otherwise I am keeping. Three decisions, right? We'll see to which bucket we need to put them into. Okay. Now we know that in the debt classification, there are three types of classifications, right? Remember, in case of a debt, we should, now here we're going to first looking into this amortized cost. The reason is, from this amortized cost only, we can get this clarification done. Okay, right. What does it mean? When it comes to this, the debt instrument classification, first we'll focus on this amortized cost. Right? We know that debt, when it comes to these debts, හොඳට මතක තියාගන්න දැන් ඔන්න අපි බලන්නේ ඒක A bucket එකටද දාන්නේ, B bucket එකටද දාන්නේ, C bucket එකටද? ඕක දාන්න මේවා ඔක්කොම debts නේ. Right? Debt instrument එකක් නේ. Not like equity, each of these debt instrument we need to we need to perform two tests. One we call the business model test, the other one is contractual cash flow characteristics test, someone call SPPI test. හරිද? දැන් ඔන්න ආයෙ ඔළුවේ පටල ගන්න එපා. ඔන්න අපි ආයෙ S2 වහගෙන කල්පනා කරන්නකෝ. අපි ගාව තිබ්බේ මොනවද? Financial instrument. Okay. Financial instrument we classified into three categories: financial assets, financial liabilities, and equity instrument. අපි financial assets I classify කරා කොටස් දෙකකට, equity and debt. Under equity we identify there are two categories: fair value through P&L and fair value through OCI. Now we know what do you mean by this fair value through P&L and fair value through OCI. ඒ දෙන්නගේ nature එක දන්නවනේ. දැන් අපි හරියට මේ bucket එකට දාන්න. Now we are in the debt bucket. When it come to this debt bucket, හැබැයි මේ debt bucket එකට දාන්න කලින් පොඩි process එකකින් තමයි යන්න ඕන. අපි හිතමුකෝ අර dustbin තුනට දාන්න කලින් පොඩි process එකක් ඇතුළට test දෙකක් කරලා තමයි මේක ඇතුළට යවන්නේ. test දෙකක් කරලා. එකක් තමයි business model test. Other one is SPPI test. ඒ කියන්නේ contractual cash flow characteristic test. Right. We'll see what do you mean by this business model test and what do you mean by this contractual cash flow test. Lazy. ඒ තමයි මෙන්න මේක. What do you mean by business model test? Business model test means entity they don't have
No, okay, sir.
now okay, right, okay. Now when it come to this debt, I am looking for, right, okay, it is a debt financial instrument, right? Debt financial instrument. Okay, now I need to do, when it come to debt, I need to do some two tests for them: rapid antigen the PCR ද අන්න ඒ වගේ තමයි. PCR කියලාම ගන්න පුළුවන් නේ ඇත්තට විතර second එක. හරි. First one is the business model test. Rapid antigen එක කරලා බලනවා. මොකද්ද rapid antigen එක? ඒ කියන්නේ එකෙන් බලනවා. ඒකට දැන් if an entity take some asset, financial asset එකක් ගත්තොත්, debt financial asset එකක් ගත්තොත්, ඒ මිනිස්සු කවදාවත් මේව විකුණන්නේ නැහැ. They keep until this get mature. If they take a debt financial asset, never they are going to sell this in the short term market. ඕක හිතානෙදට විකුණන්නේ නැහැ. ගත්තොත් ඒක maturity එක එනකන් තියාගෙනම ඉන්නවා. හරි හොඳ මිනිස්සු. They keep that until get mature. අන්න එහෙම තියෙනවා නම් business model test කියන එක pass. Read it. This means that entity does not plan on selling the asset prior to the maturity, but rather intend to hold them until its redemption. Fixed deposit එකක් ගත්තොත් මගදී withdraw කරන්නේ නැහැ. mature වෙනකම් ඉන්නවා. treasury bond එකක invest කරොත් අවුරුදු 20කින් නම් mature වෙන්නේ එතකම්ම ඉන්නවා. That is our business model. Right? That is our business model. අන්න ඒක comply වෙනවා නම් we call business model test pass. Then it goes to the second test. What is it? Contractual cash flow characteristic test. ඒ කියන්නේ මෙහෙමයි. At maturity you are getting cash, no? දැන් අපි හිතමුකෝ fixed deposit එකක් කියලා. We put our money into fixed deposit. අපි fixed deposit එකක් දාලා mature වෙනකම් ඉන්නවා. maturity එකේදී අපිට සල්ලි හම්බෙන්නේ මොනවද? අපි දාපු සල්ලි ටිකයි interest එකයි. We get interest and the principal amount. Principal amount in the sense the amount we invest. Interest and the principal amount. Interest and the principal amount. That's what we are taking. Right? අන්න ඒකට තමයි අපි කියන්නේ මේ second test. Contractual cash flow. නැත්තම් ඔය බලන්නකෝ දෙවෙනි එක SPPI. කොහේ හරි ලියා ගන්නකෝ SPPI කියන්නේ මොකක්ද කියලා. solely ඒ කියන්නේ solely SOLELY මුළුමනින්ම කියන්නේ totally කියන්නේ solely payment of solely payment of principal and interest. Solely payment of principal and interest. That is called the SPPI. SPPI means solely payment of principal and interest. Solely payment of principal and interest. ඒ කියන්නේ අපිට මේ සල්ලි හම්බෙද්දි මේ සල්ලි හම්බෙන්නේ මොනවද? interest එකයි capital එක. අපි invest කරපුවා. principal amount එකයි interest එක. අන්න මේ දෙක නම් හම්බෙන්නේ. We call that as SPPI test එකත් pass. corona තමයි. හරිද? දෙකම positive වෙනවා. Understood? First one, business model test. Business model test in the sense, until it get mature, I am not going to sell my bond. Maturity vela, maturity සල්ලි ටික හම් වෙනකම මම තියාගෙන ඉන්න. That is my business model test. Second model test is SPPI. That means I am receiving the cash flows which relate into the principal and interest. I am receiving solely I am receiving principal and the interest. එහෙම නෙවෙන්නේ නේ. මම මගේ ෆික්ස් ඩිපොසිට් එක දාලා තිබ්බොත් මට මැචුරිටි එකේදී මොනවද හම්බෙන්නේ? ඉන්ට්‍රස්ට් එකයි මම දාපු ප්‍රින්සිපල් amount එකයි. ඒ දෙකනේ හම්බෙන්නේ. අන්න එහෙම වෙනවා නම් මෙන්න මේ ටෙස්ට් දෙකම සැටිස්ෆයි වෙනවා නම් කොරෝනා ඒ කියන්නේ යා amortized cost financial instrument කියන බකට් එකට දාන්න ඕනේ. They should satisfy both the tests. If that particular instrument satisfy both the tests, that is amortized cost. Okay, right. Tell me, I am investing in a fixed deposit. My intention is to keep this until it get mature. Where should I put that investment into? Here.
Debt amortized.
Yes, it has to be in the amortized cost bucket. It has to be in the amortized cost bucket. It has to be in the amortized cost bucket. Debt amortized cost. Second one. I am investing in a treasury bond, keeping it until it get mature. Where should I classify that? Where should I classify that?
Amortized.
Yes, it is in the amortized cost. Okay, that is clear right now. Right. Then I am going to the second category. Example, investment in debentures, right? Okay. I am going to second category. What is it? Fair value through OCI. දැන් මෙන්න මෙහෙමයි. ආයි ටෙස්ට් එක කරලා බලනවා මේක දෙන්නට. මොකද වෙන්නේ? business model test and the contractual cash flow characteristic එක. හැබැයි දැන් මෙන්න මෙහෙම ඉෂුව එකක් තියෙනවා. දැන් යාගේ business model එක ටිකක් වෙනස්. මොනවද කියන්නේ? If you invest in a particular debt instrument, right? Technically you keep that until it get mature. But if an entity get a good chance to sell this particular asset with a good profit rather than keeping it until mature, that business model is different from amortized cost business model. If someone's business model is to take both contractual cash flows and selling the financial, ඒ කියන්නේ අපි treasury bond එක ගන්නවා. treasury bond එක අරගෙන මම අවුරුදු 3ක් ඉවර අවුරුදු 5ක් වෙනකන් treasury bond එක තියාගෙන හිටියොත් මට හම්බ වෙනවනේ contractual cash flows. ඒ කියන්නේ මගේ interest and capital. ඒකයි තව හොඳට විකුණලා හොඳ ලාභිකුයි ගන්න තියනවා නම් මගේ business model එක, and at the maturity I am getting same like a financial instrument amortized cost වගේම තමයි. solely payment of the capital and the interest දෙකම තමයි හම්බෙන්නේ. මෙන්න මේ දෙක ටෙස්ට් වෙනවා නම් සෙට් වෙනවා නම් අපි යාට කියනවා fair value through OCI financial instrument එකක් කියලා. What are the purposes? business model එකේ තියෙන්නේ මොකක්ද? to collect both contractual cash flows and selling the financial asset. maturity එක වෙනකම් තියන් ඉන්නේ contractual cash flows ගන්නවා හොන්ත ගානකට આવුත් විකුණුවා එහෙනම් කොහෙටද දාන්නේ treasury bond sorry ඒවා දාන්න පුළුවන් මොකේටද the other test එක හරිය SPPI test satisfy then we should classify them into the fair value through OCI සාමාන්‍යයෙන් treasury bonds අපි ගන්නවා investing in treasury bonds treasury bond එක invest කරලා තියාගෙන ඉන්නකොට හොඳයි හොඳ ගානකට આવුත් විකුණනවා so that is technically you can classify it under the fair value through OCI right clear the third one easy fair value through PNL business model test එකත් pass වෙන්නේ contractual cash flow test එකත් pass වෙන්නේ එහෙනම් ඒවා දානවා fair value through PNL අපි කියන treasury bonds ගන්නවා විකුණන්න හෙට නේද විකුණන්න ආයක maturity එනකන් තියාගෙන ඉන්නෙත් නෑ හොඳ ගානක් එනකන් නෙමෙයි ගන්නෙම විකුණන්න හරි එතකොට අපිට interest හම්බෙනවා capital ඒවා හම්බෙන්නේ නෑ නේ විකුණලා සල්ලි තමයි හම්බෙන්නේ so that you want to classify under the fair value through PNL debt instrument clear දැන් ඔයාලට තේරෙනවද නේද classification එකේ තිබ්බ මේ classification එකට ගන්න ඕනේ main character එක තමයි පුතා මේ ගන්න tests දෙක මේ test දෙකම satisfy වෙනවා නම් that become amortized cost business model test එක යාගේ තියෙන්නේ contractual cash flow collecting plus sell the particular instrument and the SSPI test is satisfied then that aim is to classify fair value through OCI neither test satisfy you want to take the fair value through PNL debt financial instrument clear the right දැන් මම ප්‍රශ්නයක් අහුවොත් පුළුවන් නේ උත්තර දෙන්න හරි අපි උත්තර දීගෙන යන්න you invest in a debenture your intention is to keep that until get mature your investment is debenture you keep that until it get mature what is it
amortized cost
it is amortized cost okay you invest in a treasury bond sell that in the short term market
fair value through PNL
yes you invest in a treasury bond your intention is to keep it if you get a good price to sell
fair value through OCI
you invest in shares and your intention is to hold it for a strategic purpose anybody else you have invested in shares
fair value through OCI
fair value through OCI okay you purchase we'll say you purchase debenture to sell in the short term market Rushdi fair value through PNL good then you purchase shares to sell in the short term market Kasun
Fair value through PNL.
very good right you invest money in a fixed deposit your purpose is to keep that until it get mature Hiranya you invest money in a fixed deposit and you keep it until it get mature Hiran is not there Siddharth no Siddharth it's not the fair value through OCI because you have invested money in where fixed deposit. You keep it until it mature. Yes, it's amortized cost. Right. Okay. So that is the basic classification where we can have. Okay. Right. We'll see what is the question number 2 says. Okay. Read this and tell what is the answer. How you should classify this. Can classify as Y. Look at this. The Nimesh purchased new finance asset on 31st December 2018. The asset is a bond that will mature in 3 years. Nimesh buys debt investment with the intention of holding them to maturity, although has an occasion sold some investment if cash flows deteriorated beyond the acceptable level. Then ඔක බලද්දි ඔයාලට තේරෙනවද? දැන් ඒ කියන්නේ asset the bond එකක් තියනවලු. Look at this. The bond is there. Mature in 3 years. Nimesh buys a debt investment with intention to hold it then maturity, although has an occasion. නේ ඉඳලා හිටලා මොනවද කරන්නේ? Sold some investment if cash flow deteriorated beyond the acceptable level. කියන්නේ එයාගේ cash flow එක fluctuate වෙනවා. දැන් ඒගොල්ලෝ එයා බලාපොරොත්තු වෙන්නේ මේ instrument එක තියාගෙන සාමාන්‍යයෙන් 1 million සල්ලි අතට ගන්න. ඕක 1 million 1,100,000 990,000 ඒ range එකේ තිබ්බට කමන්නේ. හැබැයි එකපාරට ලොකු ගානකින් පල්ලෙහාට ගියොත් මෙයා විකුණනවලු. Right? The bond pays market rate of interest. Look at this. This is a critical point. The bond pays market rate of interest. ඒ කියන්නේ දැන් මේ bond එක දැනට තියෙන market එකේ interest rate එක pay කරනවලු. The finance director is unsure whether this finance asset can be measured at amortized cost or අපිට ඔළුවට නම් එන්නේ එකපාරට මෙයා fair value through OCI කියලා නේද? Right. Look at the answer. Debt instrument can be held amortized if entity intend to hold the financial asset to collect the contractual cash flows rather than selling it to realize the fair value changes. The contractual cash flows of the asset are solely payment in the principal and interest based upon the principal amount outstanding. So you better to highlight these things in your standard book. Then when you are writing the answer, this kind of a logical answer you can write. Standard එකේ තියෙනවනේ මේකේ wordings ටික. Answer ලියද්දි ලස්සනට ලියන්න ඕනේ. Amortized cost දානවා නම් මෙන්න මේ statistic එක satisfy වෙන්න ඕනේ. නැත්නම් එකපාරට කියන්න එපා. This is amortized cost. ඒක කියන්නේ අපි නේද? Right? Look at this. Entity's objective is to hold the financial asset and collect the contractual cash flows. Making some sales when cash flows deteriorated does not contradict the above objective. හරිද? ඒ කියන්නේ making some sales when cash flows deteriorated does not contradict that objective. එයාගේ purpose එක මොකද්ද? මේක තියාගන්න එක maturity එක වෙනකම්. හැබැයි ලොකු deteriorated එකක් ආවොත් මොකද වෙන්නේ? මෙයාව classify කරන්න ඕනි fair මේ කියන්නේ මෙයා විකුණනවලු. Look at this. The bond pays market level and interest. Bond එක දැනට market level එකේ තියෙන interest එකම ගෙවනවා. Right? ඒ හින්දා the interest payment received provide adequate compensation for the time value of the money and the credit risk associated with the principal amount and outstanding. Right? ඒ කියන්නේ මෙයාට market rate එක හම්බ වෙනවා. market rate එක හම්බ වෙනවා. ඒ කියන්නේ දැනට market rate එක හම්බ වෙනවා කියන පුතා ඒකේ real bond price එක අපිට තියෙනවා දැනට. ඉතින් මම මේකට ආය classify කරන්න අවශ්‍ය නැහැ මේක fair value through OCI එකක් විදිහට. I can keep continue that as amortized cost. Right? දැන් ඔයාලට තියෙන ප්‍රශ්නේ ආරයි. මෙන්න බලන්නකො මෙයාගේ intention එක මෙන්න මේක. හැබැයි බලන්න question එක අපිට දෙනවා. මෙහෙම තමයි. Practically you want to do through by doing questions only you want to identify the real logic behind this. Here we can classify or we can identify this as a what do you say amortized cost. Reason is question itself it says බලන්නකො market rate return එකත් ගෙවනවා. නැත්නම් මේ question එකේ මෙහෙම දෙයක් දෙයි. මේ what do you say this Nimesh anticipate that the market trend will further reduce in the future. අන්න ඒ වගේ දෙයක් කිව්වොත් අන්න ඒ මොනත් ඔයාලට පුළුවන් මෙයාව classify කරන්න. මෙයා market rate එකම pay කරනවා. හින්දා අර ඉඳලා හිටලා එයා කියන්නේත් මොකද occasionally තමයි මේ bond එකක් විකුණලා තියෙන්නේ. occasionally otherwise they keep that until it get mature. Right, on that grounds you can classify them at the amortized cost. Okay, that knowledge you should bring through the questions. කරලම තමයි අපි මේ knowledge එක develop කරගන්න ඕනේ. හරිද? ඒව තමයි අර question එක ඇතුලේ අපිට දෙන පොඩි tricky points හිතන්න. අර බලපු ගමන්ම you will feel that yes this has to be a fair value through OCI. නේද? බලපු ගමන් එහෙමනේ පේන්නේ. ඇයි? අරගේ intention එක තියෙන්නේ එතනින් විතරක් නතර කරලා තිබ්බනම් yes you can do, but here it says occasionally do. Deteriorated. අනිත් එක the very critical thing is the bond pays the market rate of interest. Market rate of interest pay කරනවා නම් deteriorate වෙන්න දෙයක් නැහැ නේ. cash flow එහෙම යන්න විදිහක් නැහැ. සමහර වෙලාවට පුතා ඔයාලට මෙතනදී යම් දෙයක් නොතේරෙන්නත් පුළුවන්. ඒ තේරෙන්නේ නැති එක මම පොඩ්ඩක් තව ටිකක් ඉස්සරහකදී කියලා දෙන්න try එකක් දෙන්නම් especially for these bonds. Right. Now we know the bonds are three categories. First one is fair value through P&L. Second one is fair value through OCI. Third one is amortized cost. Right, those are the three categories. Initial measurement, when it comes to initial measurement across these three, we know that everything will be at the fair value. හැබැයි දැන් ඔයාලට මෙතනින් එහාට නම් කියාගෙන යන්න පුළුවන් වෙන්න ඕනේ. Since you know the logic now. Fair value through profit or loss financial instrument initially measured at the debt financial instrument initially measured at the fair value. What you supposed to do for the transaction cost? Yes. Transaction cost, what you're supposed to do in case of fair value through P&L? Yes, you have to charge to the P&L, right? Subsequent measurement, it has to be at the fair value where you recognize the gain in the P&L. This is similar to equity fair value through P&L. Okay, now we'll move to the second category. Fair value through OCI. Initial measurement at fair value. Transaction cost, you need to add to the fair value. Subsequent measurement also at the fair value, but there is a small adjustment that we need to do. මෙන්න මේක චුට්ටක් මතක තියාගන්න පුතා. මෙන්න මෙතන පොඩි case එකක් තියෙනවා. අපි ඒක learning එකෙන්ම ඉගෙන ගමු. මෙන්න මෙතන, right? But subsequently you should measure at the fair value that is there. And that is recognized in OCI, while this is fair value through OCI. Amortized cost, initial measurement, fair value, transaction cost, you need to add to the fair value. මෙන්න මේක තමයි වැදගත්. Subsequent measurement, you have to do that at the amortized cost. Difference is recognized in P&L. මෙන්න මේකත් ඔයාලා ටිකක් අමුතු දෙයක්, අලුත් දෙයක්. Amortized cost. Right? Clear? මේකත් දැන් clear කරගන්න හරි. Initial measurement at the initial fair value through P&L. හොඳයි කියවමු අපි. If it is a debt instrument, okay. Debt instrument are three categories, right? What are those? Fair value through P&L, fair value through OCI, and amortized cost. Okay. When it comes to the initial measurement, everything have to be at the fair value. Transaction cost. Remember, if it is a transaction cost, always fair value through P&Ls are charged to P&L. Other than that, all the assets we should add. Transaction cost we should add. If it is fair value through P&L, transaction cost should be add. Then, if it is fair value through P&L, transaction cost should be charged to the P&L. Other than that, you want to add to the opening balance. Subsequent measurement, fair value through P&L, it's at the fair value. Fair value through OCI, it's at the fair value. And the final one, amortized cost, it has to be the amortized cost. Where you recognize the difference, if it is at the fair value through P&L, it has to be recognized in P&L. If it is at the fair value through OCI, it is difference recognized in the fair value through OCI. If it is the amortized cost, you want to recognize that in the P&L. Okay. Now you know all the categories which comes under this the classification, right? Which classification under this classification, right? Now we have done the entire financial cost. Okay, right. Everybody, can you all make on your the what do you say, the phone? No, sorry, the mics. Can you all on the mics? Now I am asking questions from each of you. You need to answer. Are you all ready? Okay. Rushdie, tell me the classification part of financial instrument.
Financial assets, financial liability, equity instrument.
Financial asset,
Financial assets, equity and debt.
okay. Equity,
Equity, fair value through P&L, fair value through OCI.
okay. Debt,
Debt side, fair value through P&L, fair value through OCI and amortized cost.
very good, right? That's enough. Then Hazim, tell me about the equity instrument. I am talking about equity fair value through P&L. Hazim, okay. Then we'll come to Kasun. Kasun, tell me the equity, about equity.
Fair value through P&L and fair value
Through
OCI.
OCI, okay. And how you should do the initial measurement of the fair value through P&L?
fair value,
Then transaction cost,
fair value,
transaction cost. What you should do for the transaction cost when it comes to the fair value through P&L? Yes, Kasun, transaction cost, what you should do for the transaction cost? Transaction cost you need to charge to the P&L. Subsequent measurement at which value?
fair value,
Where should recognize that difference?
P&L,
Right, okay. Right. Next I come to Madhu. What about the fair value through OCI financial instruments? Yes, Madhu, initial measurement. Okay, right. Then Malshani, fair value through OCI equity instrument, initial measurement.
Fair value.
Okay, then transaction cost.
At the asset.
Very good. Subsequent measurement,
Fair value.
where the difference recognized. Yes, where the difference is recognized. Difference is recognized in
To the OCI.
OCI. Very good.
OCI.
Okay, right. Then come to Mishal. Michelle Mohammed. Okay, then risky. Then Zanir.
What is the question, sir?
Yes, the question is now debt instrument classified into how many parts?
3.
What are those?
Fair value through profit and loss, fair value through OCI, amortized cost.
Very good, right. Now tell me initial measurement of fair value through P&L.
Fair value. At fair value.
Transaction cost.
At fair value.
Transaction cost.
Charge to P&L.
P&L. Subsequent measurement.
At fair value.
Where we should recognize the difference?
Through P&L.
P&L. Very good, right. Then Sasni. Fair value through OCI. Initial measurement.
Initial measurement at fair value is the transaction cost. It should be added to the fair value, and subsequent measurement at fair value, and changes in fair value should be recognized in OCI.
Very good, very good, very good, right? Okay. Siddharth, what about the amortized cost?
Initial measurement fair value,
Mhm.
transaction cost, asset,
Okay,
subsequent measurement, amortized,
okay,
P&L.
okay, very good, right. Right. Puta, your name Rajapaksha, that in a meeting again left එනවා ප්‍රශ්න හද්දි කට්ටිය. Right. Okay, so we'll move to the other part, right? Okay, right. So okay, now we have done basically this classification, how we should do the initial measurement and how we should do the subsequent measurement. Okay. Now we are talking about this amortized cost, right? Amortized cost. Now you don't know about this amortized cost නේ. හරිද? අපි පොඩ්ඩක් මෙන්න මේ example එක ඉගෙන ගමු. මේ example එක very critical. Either I know I want everybody to listen very carefully, right? It's very critical. Everybody need